name, King.
Hey,
Don't crush
chill,
it.
chill. King is my last name. Yeah, yeah, no, it's all good. But like I said, we'll get started. What time is it? Oh, 6:10. Look like got 20 people in the room. So we'll go ahead and get started if anybody doesn't have any questions, comments or concerns, but you really could keep the concerns. Questions.
I actually got a quick question. It's kind of a general question, King, because I know you're pretty big on the psychology aspect. I just want to know, like, how do you develop your level of patience? Because I've been watching you trade like on the Fridays, and like a lot of times you would hold your trades through the bounces, and like, how do you develop that level of patience? I guess because when it bounces, it gets me every time. A lot, I feel like.
Um, the
This is the
easiest answer
one.
is faith, right? I got a lot of faith.
Okay.
I'm very close with God. But technically, I think the main thing that I do that a lot of people don't do is they don't zoom out. I zoom out. I treat everything like an investment and I buy time on my contracts, even if it's a day trade. That way I have time to recover. So while SPY is moving erratically, it may be a big move to you because your contracts are close, right? Zero DTE or something like that. But
Yeah.
to me, I may not feel it as much, right? So that helps me stay calm and then just doing it. It's just the reps, man. It's just the reps. And I will say, I think you guys always hear me say this: if you get beat up long enough, you learn how to fight, right? And I have been in this market full time, every day, probably for the last 5 years. So I've taken my share of beatings, and I've seen certain things that just don't make me squeamish just because I've been in the game for a little while. So it's a combination of everything, and I try to stick to the plan as much as possible. Because when I don't stick to the plan, that's when the variables come in, and then that's when I have to rely on my thinking. And I try to keep my thought process out of this as much as possible once I'm in the trade. Now, beforehand, I'm doing a lot. But once I'm in the trade, I'm in the zone. It is what it is. It's boom or boom. It's either I lost, I took a L and learned a lesson, or I hit my loss, my target, stop loss, or I made profit. It's only two things. There's no what if we do this or can I do that? If it goes here and it goes against me and I still think it's a good play, I'm gonna average down. But usually I already know where those points are at, right? I already like we can't stress this enough. We always say you should know what you're doing before, during, and after the trade, but really you should. If this trade goes here, I'm getting out. If this happens, I'm okay, I'm gonna average down. If this happens, so a lot of times when y'all see those spikes and you guys are probably nervous, I may have averaged down so that when it comes back my way, it doesn't take me as long and then I make a lot of money. So
I gotta
I hope those are
tell
good.
you,
Yeah, that makes sense.
the patience portion of this. I definitely. So today was my first day trading. Excuse me. Today was my first day trading. Literally all day on the 5 minute, the 10 minute, and the hour time frame. Only because I had such a busy day. And when I tell you, I can definitely understand why folks live in those areas versus a 15 second, because my nerves were so at ease today when it came with me trading.
Yeah.
Like, man, it was just like such a calm in the air.
Yeah.
Like, it was just insane.
I've been trying to tell you, bro.
I think I'm gonna step out of the 15 second for.
That's why I always ask you, Neil, how do you do in that 15 seconds? That would drive me crazy.
Because man, it really was different for me today.
Yeah, so that's a sorry, I was reading something. That's a great point, right? For me, people again, how do I stay so calm? Because I try to take all of the crazy stuff out of trade as much as I can. So I will go to those lower time frames, but that's like when I zoom in like a sniper when I'm ready to take the head off. But when I am actually in a trade, I always go to the 3 and the 10 because when I back out to the 3, I may see something here, but when I go to that 10, And even sometimes the 15, I can see what those candles are doing. That gives me confirmation. Nope, we're gonna still come down. Nope. Okay, let me get out of this. You just most of the time you just have to zoom out to get a more clear picture. And that's why I buy time. We're gonna talk about that a little bit tonight. With the options, right? So I try to buy time because that's one of my main safety nets, right? It's like if I'm going into battle, that's a bulletproof vest. It may not stop me from dying, but the time is going to help me, right? Is going to help me kind of adjust. Make sense?
Yeah.
Cool.
Can I just say one more thing, just because I've asked you this question before, King, and you had one more answer for me that I would like to share, and that is to pick 4 or 5 tickers that you trade all the time, and you get to know it, you get to know how they move, and that gives you more confidence in your trade, and especially if you're preparing ahead of time. Just, you don't have to trade 20 tickers. You can trade 4 or 5, and you can do those 4 or 5, every day, and then you get to know them.
Yeah, or not even every day, just when the opportunities present.
Right.
I've given you all a lot of I don't want to use the word dummy proof, but I like a lot of low risk strategies, right? The gaps thing is either on or off. You're just waiting for that, right? Buying time, same thing. I try to take the risk out of this because day trading is already very risky and fast paced, right? So we want to be able to day trade, of course, right? We want to be able to go in and get the money when we have to. But for the most part, I like to try to zoom out to see the bigger picture because I look at this game from an investor standpoint. I had spy calls this week. Well, yeah, spy calls, right? I had them this week, and I've been just in and out of them, scaling in and out, averaging down. And today, I think they expire tomorrow. Today, my runners ran up. I think SPY went to like 604. I got out of some early on, then I got out of some more because I had time. I could have swung them, but I didn't have to rush. That's the main thing. I did end up in a put at some point, but it was just quick. But for the most part, yeah, I just try to stick with the plan and try to take a lot of the risk out of this as possible. You guys got to remember, I come from trucking, which is highly risky. There's always something going on. Drivers are always hitting something or running over something or late or somebody hit them. It's a lot of variables that you have to watch on a daily basis. And I just kind of I just like to take the risk out of everything, even things that I do at home or in my personal life. We just try to make sure we manage the risk. So, and I want y'all to remember that trading is so similar to life. Like before you started doing this, you thought you were one type of person, but trading may have showed you something different. Trading is going to show you who you are, and how you live is how you trade. So I'm learning that. That's why a lot of times you guys see me on here drinking juices and protein shakes because I've been going to the gym. I've been trying to work out and lose some weight, right? Trying to be more disciplined in other areas so that I trade better, right? So it's a cohesive thing. But that's it. And I've never really been a person to panic. This thing has brought some emotions out of me though. I ain't gonna lie to y'all. This
What about Monday? Monday didn't have you like a little shaky?
Monday.
Was it Monday when we had that drop?
You probably talking about last Monday when the tariffs hit.
Oh yeah.
Tariffs
That was
with
last Monday.
with
Yeah.
the DeepSeek.
Yeah, the deep sea thing.
No, I
Yeah.
had an emotion. It wasn't panic though. It was sheer excitement.
Oh
He
yeah.
was positioned. He
Yeah,
was
that's
ready.
right. That's right.
Absolutely. Yeah, that was this week. If I'm not mistaken.
Yeah, it was this
We
week, right?
dropped Friday.
Yeah.
While we were on the live, I told you all this ain't right.
Yes.
Not
The
gonna be
hollow.
pretty. It's hollow. This thing is gonna come down. This is why I love to make you all money, but that's why we didn't get in any plays, despite the little minor interruptions we had. I still wouldn't have been comfortable taking any plays because I knew the bottom was gonna drop. And shortly after we got out, it dropped, and I knew it would continue to come down some more. So I swung some puts, but I knew Monday. Well, I had a feeling that Monday wouldn't be as bad as we thought. So, but again, just because I'm in the market, I'm watching the market, but I stick to my plan regardless. I got another Oracle play right now. I'm up a lot on, but I'm going for the gap fill, so I'm just sticking with it. I got a couple other plays that I'm holding. I got AMD. AMD, as you all saw, dropped yesterday, but I had a plan. Mark asked me, he said, "What you gonna do if it drop?" I said, "I'm gonna average down." That's my plan. It's a long-term position I got on AMD. The crazy thing is I averaged down today, but it shot up. I couldn't even really average down like I wanted it to. So I'm hoping tomorrow it tank, and then I can average down. If it doesn't tank, my leaps are gonna go back into profit soon here. So you just gotta have a plan. And those are out to next year or later this year. So this is why I chose to talk about the things that I chose to talk about. I can show you all stuff on the chart. I can make you money and give you signals or show you certain things. But this is the things that I chose to talk about. I feel like were more important things that you need for the foundation. And today we're going to talk about building an option, right? And it's going to be not too intense for you all, right? But just a general overview. Most of you all already know how to do this because unfortunately in this game we come in backwards. We come in making plays and learn and using signals and doing certain things, and then we learn. So a lot of you all already know how to build the option. But for me, I just think it's important that we go back over it. Maybe it's some things you don't know, and we just kind of cover it, and then we can get into some questions and celebrations. I think Garrett brought cupcakes for the class, and you know, things like that. So, if and no more questions.
Got one after you go through your stuff about volume, but I'm gonna wait till you're done.
Well, I appreciate that. But like I say, you guys know it's open. If you have questions while we're going, I like for you all just to get them out. If we have to wait, we'll wait on it. If it's something that you think can wait, let's just wait. But if it's something pertaining to what we're looking at, just ask me then because I would love to figure that part out. What you got, Tariq? Was that a Jigsaw or a Yamaha?
Yamaha R6.
Oh man, Neil. This your man, Neil.
Bro,
Yeah, that's my guy.
yeah, we already rode together, bro. You already know.
Yeah.
I just said he on the Yamaha though, man. You gotta
I
get
feel
I
hurt.
gotta leave it there. I gotta leave it there now.
You know you ain't right with me. That hurts my feelings.
Nah, me and my brother, I had a Jix at the time, and he had a R1, so we used to go back and forth a lot. But
I had
I
a
do
Jixer
like,
too.
yeah. Randy, you got a Jixer?
I had one when I was
You
younger.
had
I
one.
had a 900.
Okay, cool.
It is the
All right.
only way to ride.
Mm-hmm.
You know, the R1s ain't no slouch. The Yamahas aren't a slouch. I give them that.
That
But
R1 is a bad boy.
one wheel, baby. But let's get into it. We can talk about that later.
Hold
Okay.
up, before we start cooking, real quick, I just wanted to piggyback off of the advice that you gave Joy, right, in regards to
Encourage me.
getting comfortable with trading in that box, right? I don't know if how many people in this mentorship actually participated in the what was it? It was the $200 challenge.
Yep.
That we
Oh, yeah.
did, and we traded one specific ticker for 1 month, right? How many of us, and including myself, I know I'm guilty of it, the ticker that we chose to trade for that month, how many of us are still trading that ticker? Probably not many, right? It's insane. We learned everything about those specific tickers for that specific month. Yet for whatever reason, we decided to step out and trade everything else around it except for what we spent a whole month learning. That's insane, right? And I know I'm guilty of it because my ticker was coin, right? I learned everything about coin. And for whatever reason, I definitely, with everything happening positive in regards to Bitcoin, I could have made a ton of money. Because every time coin moved, it moved in dollars versus in cents, right? So that is indeed wise advice. And if you can, or you should definitely tap into that advice because there's no way in the world you're going to get comfortable trading 10, 15, 20 tickers, right? You'll never learn how they move. But I can tell you one thing will happen. You are going to misplace funds trying to learn how they move. That's for sure. Right? So, but I just wanted to touch on that because that was amazing advice.
Thanks, Neil. And now you brought up something else, and I just want to tell all of you all this because most of you have heard this analogy. Most of you all have children, right? So let's think about it like this: your kids are your kids, and you know your kids. But if you have a birthday party for these kids, that's going to add in a bunch of other kids, which are variables. If something happens, usually with your kids at home, you can tell who did it or how, or who may have done it. You have a good inkling because you studied them. Now let's look at the birthday party. When the birthday party happens, all you know what breaks loose. You can't catch a kid. You can't figure out who did what. It's very difficult. So this is why I tell you all to stay away from indexes. I mean, yeah, indexes, because those are going to have a bunch of kids in them running around. And now you're trying to catch the entire party, opposed to trying to just catch your one or two kids that you know very well, right? When you think about trading, it's the same way, right? Like I know for a fact what my family wants, or what I don't have kids, but I know what my mom likes, what my wife likes, what this person likes, doesn't like. Like I usually can figure it out because I've had an immense amount of data on these people. Same thing with SPY or NVIDIA, or people say you only trade the same things. Yeah, you want to see my portfolio? It works. So I'm not gonna keep chasing all of these different stocks if these are the ones that are working, right? If it's not broke, don't fix it. But in this game, things are ever changing, and it's all about how much information you have. So the more information you have on certain tickers, then it's easier for you to kind of spot what they're going to do. Because remember, the market is based on what? Psychology. And psychology is what? The study of human behavior. So usually if you can predict how this stock is going to react, or humans may react, then you kind of get an inkling to how the price may move, along with all of these other fabulous things that we come up with. But just think about it. This isn't Pokemon, guys. You don't have to catch them all. I'm not going to chase all of these stocks on a daily basis. I'm here to make money and buy my time back. If I got to get on one stock's back for the whole day, that's what I'm going to do. Hopefully, I don't have to trade another stock. If I did well with the first one, I won't need to trade another one, right? Now, if I see opportunities, then yeah, I'm going to take them. But it takes the pressure out of it. If you get up and you're looking at the same ones, because most of you all have 9 to 5s, so you probably can't trade every day, all the time. You're looking at these same ones, you kind of get a feeling for it, just like a mate or a child, right?
Isn't SPY like an index? So like, what's up? Sorry, I got on late, but that's really good advice. But is it like you trade? I know you like Nvidia and you like SPY, I guess. But isn't SPY like an index? So you're following a lot of kids. Oh, so SPY. So that's different than an index.
No, SPY is an ETF of the S&P index. So yeah, it's different. But in this case, I'm talking to you all, right?
Newbies.
When
Right.
you'll get to
I
a
see what you're
point
saying.
where you decide you may want to trade more things, but I kind of got away with SPY, so
King owns the daycare. Put it that way.
that's a good way of putting it for SPY. I
Mhm.
have, we have been through enough. These kids know when I say sit down, I mean sit down.
Man, listen, brother, man, I love that analogy, man.
That was great. That one hit home.
That was beautiful.
That's how I look at it. I literally look at it like a bunch of kids running around at once, and I don't have kids. So when I'm at those birthday parties, my mind is like, ain't nobody getting no whoopings. Like, how y'all managing this? And the parents are just like, oh, we just let them.
So it's so true. I was talking with my dad about this today because he was asking what all these charts are on my screen. I was saying the same thing. Like, it's so hard, and I'm learning all this. But like your analogy was great. It's exactly how it is. It's like you have to like look at 100 things, and it gets so overwhelming.
So imagine mastering one or two things that pay you all year. that when you get on the computer, they just pay you. They say, I submit, here's your money. It doesn't take much, guys. The internet and a lot of things, because there's so much information coming at you on the internet from your friends, from the Discord, from us, that it'll make you dizzy. And you have to separate that stuff because, yeah, we can look at multiple things or a lot of different things because that's the style we've developed. And you may at some point decide you want to trade SPY. You may decide that you want to trade a lot of things at once. But in the beginning, we got to be careful because we still don't understand one. And that's why I tell y'all, make the watch list and watch all, maybe like your top 5, watch them religiously. Only trade 2, trade those 2, and I guarantee you, after trading those 2 long enough, you'll know when it's safe to go to the 3rd and the 4th and the 5th ones. Because what happens is when you watch them and you trade them often over and over, you figure something out about the market. I can't describe what it is, but there comes a moment where you figure something out about the market and you're like,
Yeah, that's what I'm hoping.
yeah, it'll click. But it's just, if you're trying to read everything in the book, you're not going to get the message. So, everybody good?
That's
I heard a lot of stuff, but there was one thing I heard you said, do I want to see your brokerage account? And the answer is yes.
Yeah.
Give me 1 second. What I'm actually going to do is I'm going to enable the waiting room again. And I want you to say that again. You got one more time to say it. And we're gonna be down one, guys. But yeah, no, I'm that's just my passion talking, guys. I'm just saying. Like sometimes, people be like, "Oh, you don't trade this, you don't trade that." Nope. Somebody asked me earlier, "Did you get on DJT?" Nope. Why not? Why not? I didn't. I don't chase everything that I see. Just not. But all right, let's get started. So I think we're gonna go here. Hold on, guys. Got another setup, so I'm still getting used to it. Open.
When I started, I used to trade just like crowd, and I did okay. And then like I started looking at all these signals and listening to everything. And sometimes I think about you at literally all the time when I open up my trading account. I'm like, if King saw this, he would kill me. I have like 20 options that I've just been sitting on that like a lot of them are losing. And it's just because that discipline, like I gotta learn like what you say, because it's like my biggest downfall. Like I try to get into all these opportunities and things, and it's like a big problem.
Those are going to burn you. You can't chase everything.
We started at the end. Sorry about that, guys.
Yeah, 'cause, even I'm finding too, man, like, I love day trading, but, I found a lot more success in my swings. Just like King said, buying time is always good. Now, I honestly don't signal everything that I trade because sometimes I want to follow it. I want to see it first for a minute. And I mean, I really don't like putting out bad signals. But those longer plays tend to do very well. And I love the analogies. I've been listening in. Got a couple things cracking right now, but y'all will see my face here in a little bit. But I want to say that King is spot on. And man, dude, just the wisdom, man, that you are gifted with, brother. Man, thank you, man.
I appreciate
Thank
y'all.
you, bro.
I appreciate you all. Thanks, Oscar.
No
Yeah,
problem.
again, man, I try not to. I see for a fact there's a lot of people that started this career or trading with me that aren't anymore. They didn't make it. I see people come in and out the door and they don't make it. And I realize the market is attacking us, right? I've told you guys this numerous times. We are under attack. So I try not to stick my head out there too long to give them a shot, right? That's why usually I'm done after a certain time. It's a lot of different things, and we could talk about them afterwards. But thanks for saying that, Mark. I appreciate you also, brother. You guys ready?
Sir.
Can you see my screen?
Yeah.
Okay, so today we're
Yes,
going to
good.
talk about building the option, right? So, disclaimer, you guys know this. This is not financial advice. This is for personal investment and educational purposes only. I am not a financial advisor. I cannot tell you what to buy or sell. All investments have risk, and it's important it's important to conduct your own due diligence while practicing risk management. Everybody good with that?
Yep.
Let me just check and make sure I did start recording, guys. I thought I did.
You are.
Okay, cool. All right, so next. So first thing you want to do, right? And I'm just gonna kind of go through a list. If you guys have questions, just raise your hand or say I got a question. You guys know what to do. So the first thing you want to do is determine the direction of the trend or the momentum. We like to say momentum or the trend, either way, right? Bullish, bearish, or flat. Bullish is you expect the stock price to go up. A lot of you all already know that. Bearish, you expect the stock price to go down. Flat, you expect the stock to you expect the stock to stay within a certain range. That's consolidation. Okay. So the gem that I dropped is something we just talked about. Look at the stock's trend on higher time frames, the daily, weekly, and monthly, to see if it's generally moving up, down, or sideways. This right here will help, because if you're jumping into a stock that you don't know much about and it doesn't trade much and it's consolidated, you will waste a lot of time and style and money, right? But I always zoom out. Everything I do starts at the daytime frame. I always zoom out just because I want to be able to see around the corner, right? Going to the daytime frames gives me like more information, right? Everybody good with that?
Yep.
Cool. So choosing the right strategy. For a bullish outlook, you consider buying a call option, right? For a bearish outlook, you consider buying a put option. For a flat outlook, you can look into straddles, strangles, iron condors, which can profit if the stock stays in the range, right? Sometimes you'll hear Mark talk about he straddled this or he straddled that. That's a way to kind of make money either way, right? You buy a call and you buy a put. I don't really do those. So for new traders on flat days, what I want you all to do, don't come up with some elaborate plan to straddle it, because you could lose money like that. It's not as simple as you think. Just do nothing. If the market isn't giving you anything, don't just do nothing. You can't trade momentum if there is none. Also, I encourage newer traders to start with one single call or one single put option to understand the mechanics. Okay? If you're new in the game or newer in the game, you should not be buying 100 contracts. You should not be buying 50 contracts, right? Try to get one or two, see how they move, learn the mechanics. The main thing about this game is don't rush. It isn't going anywhere. The only way it'll go somewhere is if you run out of money because you've been rushing and you didn't stick to the plan. It's gonna go somewhere, and it's gonna go in the back, and it's gonna be something you never want to touch again. Right? It's gonna take a lot. I'm telling you guys what I know, not something I read in a book. If you take those L's early on, it's gonna take a lot to pull yourself out of that hole. Don't go in. It's just that simple. Stick to the plan, okay? If you don't put a $10,000 on a play, you can't lose $10,000. Okay? So select the expiration date, right? And I'll show you these on the chart that I have. Well, on another screen, but short-term expiration is 1 to 2 week swings. These options are cheaper, but they lose value faster. Why? Higher time decay. You guys probably already know that. Medium-term expiration is 1 to 2 months, a good balance between time decay and price movement potential. Long-term expiration is 3+ months. So you hear us talking about further out swings or leaps, right? They're more expensive, but they hold value longer because they have lower time decay, and they may give you time to wait out the volatility. Similar to what we're talking about. Buy time, because today may be the day that the market is tricking people. And if you have more time with your contract, you can wait it out. You can watch them trick people and wait it out and make a decision on what you're going to do. I do it all the time. New traders start with expirations that are 1 to 2 months out. This is important. This lets you avoid the fast time decay of near-term options while giving the trade time to work and more time to make decisions. Time is going to be your best friend. Mark says it all the time. Because what happens is this: if you have more time on your contract, now you have more time to make decisions. right? Now you can say, well, now you can maybe DM one of us or text Mark or Google or go on, talk to your friends, kind of get more information about what's happening with their stock if it's not doing what you want it to do. But if you have shorter expiration, you're not going to have time to make decisions. You're going to have to, it's either going to make or break, right? That's why I don't mess with contracts that like zero DTEs and all of that. It's just a bad business deal. It doesn't make sense. I gave someone this analogy yesterday, and it's like this. If I told you, I said, hey, I'm going to give you this product to sell, but you have to sell it by Friday. Actually, no, you have to sell it by tomorrow. And if you don't sell it by tomorrow, I get all of your money. Okay. Or is that a good deal? You guys taking that deal?
Nope.
Probably not. Jay said no. Jay probably said hell no. It looked like he said no. So again, but if I say, okay, I'm gonna give you this product and you have 6 months to sell it and I'll pay you double, would you take that?
Yeah.
You probably would take that. You probably would take that
Absolutely.
chance. Same thing with options. They are our products. I'm not buying bad products that I don't have time. 6 months, I can sell anything in 6 months. And most of you all probably can too. Why? Because you have enough time to dig up the data on how it was sold last time. And now you can devise a plan on how you're gonna sell it. Make sense? Okay, let's keep going. So at the top of the expiration dates, but I'll show you that on the next slide. But this of course February 16. So they're gonna be a week out, right? Everybody understands this. This is the expiration date. February 16, 23rd. Okay. So let's talk about strike prices. And again, here I got a diagram on the expiration is gonna be at the top. These are gonna be the strike prices, okay? Everybody good with that? On the left is calls, on the right is puts. Most of you all use Robinhood, so it should look familiar to you all. Everybody good? Shake some hands. Cool. All right, so picking the right strike price. Strike prices determine where your option becomes profitable, okay? So at the money, closest to the stock's current price, but this is balanced in cost and risk. It's at the money. It's two different things. A lot of times we get in the money and at the money confused, but this is at the money. In the money, strike price is below for calls or above for puts the current stock's price. These are more expensive, but have a higher chance of profit as they already have equity baked in. Does that make sense to everyone?
Mm-hmm.
They're in the money already.
It makes sense, but the only thing I would say is like it says you're in the money, but you're paying a premium. So you're really like, are you really in the money, or are you like you're in the money when let's say, there's a $40 share premium for that to be in the money. Like, is that really in the money, or you're just better off anyway? Is what you're saying?
Well, the term, I don't know if you're confusing the two, but the term in the money means exactly what it means.
Right.
Now, in the money, like you getting money, I don't know if that's what you're saying. Maybe I don't understand your question because
I just mean that you pay a premium to be in the money. Like your premium is higher. That's all. Like, so your cost. Yeah.
Because the equity is already baked in.
Right.
So you're already kind of, you're already leaning towards being profitable because you already have equity in the stock or the option. Okay. You good on that?
Yes, you're just saying basically you're taking less risk if you're getting if you're in the money or close to the money, as opposed to like $60 out, or whatever, some amount out. You're saying it's better to like take your less chances and be close to the money. Even though you pay more money, you won't lose it as quickly. Is that kind of like what we're saying?
What I'm saying is what I read. Michael, sometimes you ask me questions
down more, man. We need it broken down. What's better? What's the odds of being like
no, it's a really important point, because sometimes
I can tap in with this one.
Yeah,
for sure.
So
hey, wait. Everybody chill out. I'm just joking with Michael.
Okay.
I understand. I understand his questioning. I'm just joking with him, okay? But Mark, if you want to answer the question for him, go ahead.
Okay, so basically, you're going to pay a higher premium for an in the money play, but your chance of profitability is always going to be a little bit higher, especially if you have time and that play is within the trend of the chart. So yes, you do pay a higher premium, but you're paying a higher premium for something that is more probable to pay you back versus you paying a lower premium for something that is less likely to pay you out of the money.
Yep, and I'm gonna break
Got it.
the rest of that down. Okay, Michael, you good with the questions? But let's do this. Let me finish, and then if you still have a question, then ask.
Okay. Thank you.
I'm gonna the way I break it down is kind of like a journey. So I think I'll answer your question within where I'm going. Okay. Cool. So let's talk about out of the money. Strike price, out of the money options is the strike price is above for calls or below for puts, the current stock price, right? These are cheaper, but they require the stock to make a bigger move to become more profitable. Okay. So what I have to say to newer traders at the money or slightly in the money options are often safer because they have a higher probability of profit, more than out of the money options. Okay. Although they will cost more and you can lose more faster as price moves against you, I'd rather you stop out than allow the price to move further away from an already out of the money option. Now, this is not set in stone. Like Neil likes to go further out of the money because the cost is lower. And listen, whichever strategy works for you. I'm just telling you guys, as newer traders, you may not be able to adjust to the different variables. So I like going at the money or in the money. And if you're not right, you hit your stop loss, you're just done. What I don't want to happen is you're so far out of the money because you have time and you went out of the money that it's going against you, and it's just like catching a falling knife, right? Because you have so much time baked into it. It didn't drop as hard as it should have, but you're getting further away from your target, your strike price. So for newer traders, unless you're doing like a leap or something like that, I'm just gonna say try to go at the money or in the money. That's just what I found to work better because again, one thing about it is when the stock goes against you, until you've been through it enough, you don't really know how to respond. So if it's going against you, let's just stop out and go back at it again. We don't want to have 150 strike price and the stock is falling to 98 bucks and you really don't know what to do. But you think you have a lot of time, so you're okay. No, that time will work against you just like anything else, especially if that stock continues to pull back. Go ahead, Oscar.
Also, for newer traders and not too familiar, if you buy a contract out the money, the premium will move a lot slower. So if you see people that are saying, "Oh, I'm up 60, 70%," and they bought it in the money or at the money, their premium is going to move a lot faster. So I've seen a lot of people in the Discord saying that, like, "Oh no, my contract, the price of the stock is moving, but my contract is not moving."
Right.
And I noticed that they're way out the money. So I don't know if maybe somebody here that is fairly new doesn't understand that concept. So just wondering.
Yeah, they may have bought out of the money. And again, for now, there will be times where you buy out of the money. I have some out of the money contracts right now, but there will be times where you know when to do it. And until you get that rhythm, just kind of stick closer at the money or in the money so that, profit is easier to make. Make sense? Michael, did that answer your question?
Yes, totally. That's why I'm just asking questions because this topic is like so important to me. Like it really hits the nail on like what so many of us make mistakes on, just buying the wrong stuff, gambling a bit, not really like fixing in on where your best odds are. So I think it's super important to understand.
For sure. That's definitely as you guys see, I agree. I put it down here. Okay. So that's number 4. Oh, where's number 5? Okay. Maybe I got my numbers mixed up. Okay, so oh yeah, I did get my numbers mixed up. Number 5 we talked about already. Number 5 would have been a breakdown on IV. but I chose to talk to you all about that a little bit sooner and took it out of this lesson, okay? Because I felt like it was important to talk about with volume. Cool? So look for high volume and open interest. Volume, we talked about this. Volume shows the number of contracts traded on any given day. Higher volume means better liquidity, making it easier to get in and out at a fair price, okay? Open interest, the number of open contracts not yet closed. High open interest typically suggests strong interest and liquidity in that contract, right? A lot of people want it, so that's good. So avoid options with very low, less than 1,000, very low volume, less than 1,000, and open interest. I talked to you all about this, I think, last week, right? As this may have a wide bid-ask spread, making them harder to trade profitably. Don't laugh at me, y'all know I gotta slow down and say that. So, what I said, volume should be substantially greater than the open interest, right? Also pay attention to higher numbers at specific strike prices, as this may leave clues about market sentiment. We touched on that a little bit last week, but if I see people stacking up, if I'm looking at the 100 strike and I see people stacking up at the 110, the 120, the 125, the 130, and it's like as we go up, I'm seeing more open interest and more volume. That leads me to believe that a lot of other people think the stock is going to go up also, right? Because they're buying at those strike prices because they're hoping to make money. So that's just kind of a little trick we use to kind of like gauge the sentiment when we're getting into the plays, right? And this is just an example. You see how high this volume is? Open interest is 10,000. Volume is 30,000, right? When you see volume like this, it's no mistake what's happening, because they can't be selling the contract because it's only 10,000, right? That 30K is people today, okay? People going into that contract. Make sense? Yes. The head nods are getting a little slower. Yes. Everybody good?
Yes.
Cool, cool, cool. So I wanted to show you all this. This is something just kind of neat that I kind of looked at early on. Like I got tons of notes and I got all sorts of stuff from different mentorships and journeys. But I thought this was pretty cool, right? So if you see price going up and you're looking at your contract or several contracts, right? Or you're looking at the options chain. Oh, my bad, guys. So when you see price going up, volume is also going up on those contracts, and so is the open interest. No brainer kind of, right? It's going to tell you, okay, the trend is bullish and it's strong because, like we talked about, price is going up, but I'm seeing that more people are getting into this contract. So that already lets me know that the trend is probably going to go up, or it is headed up. Just like confirmation, right? Cool. So if you see price going up, but you see volume on the contracts decreasing and open interest decreasing, that's a weak trend. It's hollow. It could be hollow because the people are leaving. Price may be going up on the stock, but if we're dealing with options, that's who we selling to, right? The options are our product, so we want people there to sell the product to. And if they are leaving, then I don't know how long we want to hold on to a strong trend or bullish trend, right? I don't know how long we may want to hold those calls if we see people are leaving. If there's no one there, you're the only person left holding the call. I don't think that's a good thing, right? So this is something to keep an eye on. And again, this is a lot, but it'll start to click as you put yourself in these scenarios and you start to look at the options chains and things like that. It'll start to make a little bit of sense. So strong bearish trend, same thing. You see price going down and you see the volume and open interest on those puts going up. You already know they're getting in position. Somebody knows something. And the thing about that is what? Somebody always knows something. Okay. So the next one, price is going down, but the volume is decreasing, and so is the open interest. People are leaving. People are selling that contract for one reason or another. You don't want to be left holding the bag, right? Okay, I just thought that was something cool that I would throw in there for you all, just to kind of get a feeling for like, a strategy to kind of how we look at these things, it'll become second nature. Your eyes will just go to it and you'll say, wait a minute, I don't know about that. Let me hold off. Let me watch this contract a little bit longer. Because one thing I'll do is, I don't think a lot of people do this, but I watch the contracts. We use the watch list, or like you see a lot of people put stuff on their watch list, or in our journal, or I screenshot it, or I put it on the post-it, or I text it, something, right? Or I put it in a note. But I'll watch the contract, because if I'm buying a lot of time, that contract may move up and down. And if it's the product that I want to buy and I can get it at a better price and I already know where it's going to go, then it's kind of good to already know the prices. Okay. So again, we're thinking about this from an investor standpoint. When I'm thinking about buying something, I'm like, well, I see it's this price. The contract may be $7 today, but all we need is a bad day or some other things in the sector to pull it down a little bit, and maybe I can get the contract for $5 today, right? But I'm also going to watch the open interest and volume to see what's actually happening before I buy that product. I'm in no rush to do anything. The market isn't going anywhere. And and the market works like this. The market says, hey, if you stay right here and don't move and do exactly what you said you were going to do, I'm going to come back and give you some money. I may not know when, I may not be able to tell you when I'm going to give you the money, but you got to stay in pocket and I'm going to give you the money. If I don't come back within a certain amount of time, then you just leave, right? But you have to stay in your pocket. You have to stay in your zone. And usually the market will pay you. If you can't wait it out or you don't think it's a good deal anymore, you hit your stop loss and you go home. Okay. Kind of like Beast Games. You guys watch that? Maybe not. All right, keep going. Well, like any other game show. Jesus, what y'all watch? Wheel of Fortune? Jeopardy?
I watch Beast Games. It's a good show on Amazon.
All right, guys, let's keep going. Okay, so this is a big one. We often don't think about this, but this is important. Check the upcoming events, catalysts, and news, right? So one big thing we always want to pay attention to when we're buying any product is when is earnings. Because as you know, you can be a genius and you can have the best plan in the world, like you found a treasure chest, but earnings can change all of that. So you're gonna always want to know where is earnings in relations to where you buy. Make sense? If earnings is too close, I may not buy it. Okay. So options around earnings can be expensive due to high IV, luxury taxes, we call it, right? But they can also lead to big price moves. So it's 50-50. But you need to understand that when you're holding a product, you need to understand that tomorrow this thing could be worth 10 times what it's worth, or it could be worth nothing. So you want to know where's earnings, because earnings is like, I don't know if you guys ever played Uno, but earnings is like a draw four. It'll change the game. Somebody get a couple of those going, it's no good. Okay. So it's a variable, in other words, and it's a variable that has a lot of risk attached to it. That's why I don't trade earnings. Okay. Economic events, major reports, inflation and employment data. And employment data and rate decisions. FOMC meetings can affect the stock's price drastically. If y'all don't know this by now, I promise you, I don't know what they're looking at this point. Every day is something different. They found a new metric to look at, and it changes things, right? So economic events, you're going to always want to stay on top of that, because I know we're all guilty of getting into play and we're like, whoa, what just happened? Oh, the feds are speaking. I didn't know. Oh, I didn't look at the calendar today and Powell is speaking in 2 minutes. And I was having a beautiful day. I was jumping around, about to make some money, and nah, old Papa Powell changed that, right?
Mm-hmm.
So we really want to pay attention to this now, because we have a variable president, is what I'll say. He is a variable. It is hard to understand exactly what's going on at any moment because he's impulsive. So, or he appears to be impulsive. So you want to be careful, because him talking and Powell talking is going to move the markets, right? He had a speech yesterday. If I hadn't looked at the calendar, I wouldn't have known that it was going to happen. Okay. So we want to always make sure we're looking at the economic data because it can change your day. And when Powell speaks, you all already know the market is weird until he speaks, and then after he speaks, it gets weirder, right? So when he speaks, usually I try not to trade, and if I do, I try not to trade until he speaks. I have traded beforehand, but I learned a lesson, and I stopped trying to do that. If I see him speaking, I figure out something else to do with my time, and I said, well, maybe I'll come up with a plan for what happens either way. Right. So I try to just get ready for, I don't really straddle. I have tried that, but it doesn't always work out for me because I don't know when to get out and then when to sell the other one sometimes. So it's not the best strategy for me, but I will prepare to kind of figure out where the market may be going after what he said. Okay. Cool. So new traders, do not trade earnings. It's not financial advice. You can do whatever you want, especially once you leave this mentorship. You can do whatever you like. But I'm going to encourage you, don't do it. If you want a long-standing career, stay away from earnings until you have enough money where it doesn't matter. Okay? Or you have enough house money that you can gamble with it. And until you have enough house money, do not mess with earnings. Okay? Now, I don't know how many people on here, but if it's 20 of you all, 7 of y'all are still gonna do it. But that's on you. You can't say I didn't tell you, it's recorded. But no, guys, all seriousness, like we don't want to be we don't want to get in the habit of taking too many risks. And earnings are risky. My biggest loss to date came from an earnings play. $27,000 by the time I could hit the button. Okay. Couldn't even get out of it fast enough. 27,000 was like, whoo, I did okay, I guess. Not a pretty, not worth it. Wasn't a pretty day. Remember earlier I told you all there will come a day where you're gonna have to pull yourself out of a hole. You're gonna have to give it your best. Go back at them. That'll be the day. And if you don't do it correctly, it'll wipe you out. So we're just gonna avoid those, right? So again, if you do, avoid buying options right before earnings unless you're specifically looking to trade the momentum or volatility. Alternatively, consider less risky strategies like straddles if you just have to play earnings. If you just have to gamble, do maybe straddle. Try to put something in your favor on both ends and hope that works out for you. I see people do it, but not really my thing. So again, you can check these on CNBC. You guys should all be familiar with CNBC. That's going to be your news source. TradingView will show you the economic calendar and earnings. But like I think me and Mark were talking about that. TradingView is a little off with the earnings sometimes. So you want to double check it with Earnings Whisperer or another site that has earnings. Always double check TradingView or check the two sites against each other. The easiest thing you can do, and I do this often, is Google. Real simple. What earnings are this week? What earnings are coming up today? Okay. Let's go to the next one. Okay. Set a plan for profit targets and stop loss. Okay. Both of these you should already know before you get into the play, right? We talked about this over and over again, and I'm going to talk about it one more time. Profit target, decide on a realistic profit target based on how much you pay for the option and your price target. That's important. Not just what you pay for the option, but where you see the stock price going. Because if you're waiting on 100% and you've already passed your target, you need to be careful. Okay. If you have a target a price target, which you should stick to it. And by price target, I mean, where price do you think the stock is going to go to that you're going to take gains at? Okay. So like if we got price target on Nvidia with 125, at 125, we're deciding to take profit or what have you, because we've looked at the chart and the chart supports that we'll go to 125, but it may not support that we continue to go from there. It's all about your strategy though. But when you come up with a profit target and a price target, just stick to it. Easiest thing I can say. Set a stop loss, right? Set a limit on how much you're willing to lose if the trade goes against you. I usually watch my loss percentage tighter than my profit. Seriously. I am watching the losses and the chart at the same time. But usually I am watching the losses on my position, because when I get to a certain point, 20, 30%, I don't know what's going on and I don't really care. I'm probably going to stop out unless it's something that I've decided to give more time. Now, there are situations like that, but I've learned that if you worry about not losing as much, then winning is inevitable. Okay. So when I look at the losses, because the wins never hurt me, the losses do. Only getting 10% never hurt me, right? But losing 100% or losing more 40%, losing more than I intended always hurts. If I went into the play to make 100% and I only made 30%, that don't bother me. That doesn't hurt. If I go into the play to make 20% and I make 60, I don't worry about that. I'm just gonna take the profit, okay? But the losses is what we have to pay attention to, because winning too much won't stop your career. Losing too much, well, we all know what happens, right? So this step is critical for risk management. You should already have a plan before entering the trade. Sticking to your plan helps avoid emotional trading decisions that can lead to irrational decisions. Again, I'm a pretty smart guy. I'm not the smartest guy in the world. And I'm not gonna say that I can control my emotions like Dr. Phil or somebody. I don't know. I try to take a lot of the stuff out of my way, right? Because I don't want to have to use my brain and my memory outside of controlling this product and watching the chart. I've been watching the chart, listening to the Discord, looking at CNBC, talking to y'all on live, this and that. And now I have to make a decision on the fly because I didn't make one before I got in. Someone asked earlier, how are you so calm? Because I already made the plan before I got into the play. And I'm just waiting on it to happen. And honestly, when we on those live trades, if I don't make a plan and stick to it, I'd be all over the place. It's a lot of people talking at once, a lot of different variables. So again, you're gonna have to come up with a plan and just stick to it. It works. I hate to say it. I wish it was more fun. I wish it was like exciting, but no. Come up with a plan. You say, if this happens, I'm gonna stop out. If this happens, don't say, oh, it could keep going, or well, I'm gonna just go ahead and let it run. Or no, stick to your plan. Take the money and go home. Okay?
Do you like trailing stops?
I do, but I don't use them as much anymore. But I do. The only problem with trailing stops is usually it'll stop you it'll do a market order. So I haven't been using them as much lately.
You could have a trailing stop to limit, I believe, but yeah, I don't. It just helps on the upside, I think, because then it doesn't like it'll readjust. But yeah, I haven't used them very much, but I should.
Yes, yes. I am a fan of them. I've changed the way that I trade right now, so I haven't been using them as much. So maybe you probably maybe you can set a limit. Each brokerage maybe, I don't know. I just know when I were using them, I think it was a market order that was happening, and it's just up to you, right? Any questions? Cool. Getting on through this. Okay. Review the options Greeks. Okay. When we're looking at these options contracts, always look at the Greeks. So let's talk about the different Greeks and what they mean. Delta. It measures how much the options price moves with a $1 move in the stock price. For example, a delta of 0.5 means that the option price will move 50 bucks. I put 50 cents, which is 50 bucks, for each dollar move in the stock. Does that make sense? I think we talked about that already.
Per share, right? So there's 100 shares in an option,
Right.
So every dollar it's going to move 50 bucks.
If it's 0.5, yes. So 50 cents times 100.
With your example.
Yep. So every dollar that the stock moves, you're gonna get 50 cents added to your contract, and you got 100 of them, so it's gonna be 50 bucks. Good. Cool. Gamma. Gamma shows how much delta will change if the stock moves. Higher gamma means more profit potential, but also more risk. Okay. Gamma is going. You're going to also get delta and gamma. You're going to get both of those added to your contract, depending on how it's moving. Okay. Theta. You all know this one. Theta shows time decay, or how much value the option loses daily as expiration approaches. Higher theta means options lose value faster, right? It's all we pretty much been talking about, time decay. Vega, this one measures the sensitivity to changes in IV. High Vega means the options price is more affected by the changes in the volatility, okay? Sorry about that. Got a message. Roll. I put this one as a star because I don't use it much, right? I do pay attention to it here and there, but I don't know. I don't want to be a bad teacher, but it's never changed my decision. Now, if you're looking at longer out contracts and leaps, then it this kind of matters. But in my experience, interest rates don't move 1%. Like they, now lately they have been moving a lot, but let me explain it. It measures how sensitive an option price is to the change in interest rates. It's calculated as the amount of money an option gains or loses for every 1% change in the interest rates. Again, I don't really use this one. I hate to say it, but I don't really pay attention to it that much. To each his own. I've learned to kind of make this thing simple, and I just stick with my plan. Cool. Cool. So, King's Gym from before. For newer traders, theta is most important. I've been saying this all mentorship, all day. Theta is the most important, in my opinion, because that's how much money you can lose. Then delta, as it shows how much the options price will change with the stock movement. A higher delta, 0.7 or 0.8, generally means greater probability of ending in the money, right? So I like stocks with at least 0.5 and up. Delta, especially if it's a swing. Doesn't always work out like that, but the main thing is I look at the delta to see, I look at the delta and then I look at my price target. My price target is $10 away from where I'm at. Then I know that I can make at least a minimum of 500 bucks if I hit my price target. And it'll probably be some other things baked into the contract at that point, depending on how fast it moves. So that'll show you kind of how much you can make, and it kind of help you come up with an idea of how much profit you're looking for or the percentage, right? Because we take these contracts and we look at how much we want to make by percentage, not so much the dollar amount, right? But theta is most important because that's what's going to determine where you lose money. Okay, makes sense. Okay, so here's an example. Let's just breeze through it. Let's say you think that NVIDIA stock is set to rise. So your bias is bullish on NVIDIA, right? So if you're bullish on NVIDIA, the strategy you want to use is you want to long a call option or buy a call option, go long, right? Now you could sell a put, but I don't want to talk to you all about that yet because I don't want to confuse you and add more information to your plate. If you think NVIDIA is bullish, look at buying a call. Okay. If you think it's bearish, look at buying a put. And the rest of that stuff will come to you as you progress. But right now, we want to keep it simple. Expiration 30 to 45 days out. So we saw that, like I said, a month and 2 months. So 30 to 45 days. This is just an example. Strike price. You want to go at the money slightly or in the money near the current stock price. And I explained to you all why I think that is a better strategy starting out. All right, until you learn the mechanics. Check the IV. Confirm that the IV is in normal range to avoid overpaying. We talked about this last week. Now I know a lot of you all are looking at the IV now. You're looking at that contract, you're looking at the IV because it is a luxury tax. And who wants to pay that if you don't have to? Okay. Volume slash open interest. Look for contracts with good liquidity. We talked about that. You don't want to buy the bad product or the less desired product. You want to be able to buy the product that's going to move. It's very simple. Just like anything else you may have bought or wanted, you didn't want the one that nobody else wanted. You wanted the one that was popular. You wanted the good one, right? Same thing with these contracts, right? So, set targets. Set a target for your gain, X amount or percentage amount, and stop loss around the X percent of the premium amount. So we talked about that. If let's say the whole numbers, if the contract is $5, right, cost me $500, and I say I'm willing to lose 30% of that, that's $150. Okay. But if I'm setting a target for my gains and I say I'm wanting to make 30%, that's $150, right? So for me, when a contract gets to either $6.50, right? Yeah, $6.50, or it pulls back to $3.50. That's 30% either way. You guys understand what I did there? You're just taking the contract and you're just taking a percentage of it. Okay. 30% of 500 is 150. So in either direction. Cool. Cool. Greeks, look for a delta around 0.5 to 0.7 for a solid balance and risk to reward. Does this always happen? No, but for now, I want you to look for it. Just keep looking for it. Keep trying, and then eventually you'll get the hang of how you can kind of maneuver, right? As far as the delta goes. So again, trading is going to be your own style. It's going to be your strategy, but I'm just giving you some hardcore things to look at until you figure out like how you want to maneuver. Okay.
And volume and open interest, you gave a number. You said volume you like over 1,000 and open interest over 1,000 as well.
Generally. But what I'm giving you all that number to protect you. What I'm looking for is higher volume and higher open interest. But as newer traders, as mentees, if you're getting ones with 1,000 and above, then you have a lot of other people at that price to kind of maneuver. Make sense? So it's not going to always be 1,000, but I like to kind of put you guys in the best situation possible. So if you can use 1,000 and up, then go for it. Okay.
Question.
What's up?
When is at 1,000? That's usually when you're like at the money or in the money. When you're looking at those contracts, when you're trying to find them, because when you're looking at the other ones, usually they're like lower, unless you're saying what you said earlier when you spot one and you see that it's bringing attention to it. But on a normal day-to-day basis, what I'm trying to say is like if the say you're playing spy. I don't like play spy because you said new people shouldn't play spy. When you're looking at spy, you're playing at the money because more people are at it, or I'll say Nvidia because more people are at it at 1,000 opposed to being outside of it.
Well, that could be on the options chain. It's going to vary, right? But what I'm getting at is that you want to purchase the contracts where there's more open interest and volume. Now, if you can't figure out if this is enough, look at the ones around it. Okay. If you look at some and you see, once you look at the chain, you'll kind of get a feel for what the numbers are, right? But if you see something that's got 1 and 2, no, you don't want to play that. There's nobody there. But if you see what's 700 in open interest and 1,000 in volume, then okay. Well, that gives you more inkling to maybe want to play that strike. But I like to look around too. Okay. Because you may be looking at one that you think is good, but you may see one, a strike or two above it, that has much better open interest and volume. Cool.
Sorry, you said more open interest than volume you want, right?
I said both, but you want more volume than open interest. Typically.
Got it.
Yeah. Because open interest, you remember what open interest is, right?
People hold it.
Yeah, there's people that are already in that contract. I like to see more volume because it lets me know that they're not selling that contract. Okay.
Does that also apply for going for leaps too? So say like for like January in 2026?
Leaps are going to be a little different. Leaps are going to change because they're so far out, it may not be a lot of people there yet. So leaps are going to change a little bit.
Okay, so for that, it could be okay if we see a lot higher open interest and well compared to the volume that's on that contract.
Yes, because
Okay.
maybe they're not, maybe no one's moving that contract that particular day. But if the open interest is there, they're waiting just like you.
Mhm.
And you want to always make sure you got someone there to sell that to. Okay.
Got it.
You don't want to be there by yourself because it's not gonna be good. You bought something to sell to yourself. That's not good. It's like getting high off your own supply. You don't do it. No, but let's keep going, guys.
So sorry, just to be clear, you want more volume than open interest, right? I was getting confused.
Typically,
Okay.
but he asked about leaps. So if it's a leap, it may not be a lot of volume in that contract unless people were buying it that day. But it may be a lot of people waiting, right?
Got it.
You sure? All right. Let's keep going. I thought this was going to be the quickest presentation, but it's not. So just we're done though. More gems I picked up along the way. Stuff I've already told you all. Newer traders, never trade zero DTE. New traders, old traders, young traders, whatever traders. Don't trade zero DTE. It's a bad business deal. It does not make sense. Like, you don't do it in any other aspect of your life unless you're playing the lottery. Buy a ticket and hope you hit by night. We're not doing that in this game. If you guys want to do that and you want to gamble, then I'll set up like a little fund or a cash app. You guys could just send me money and then I'll send you like cute gifts or something. I don't know. I'll keep you entertained, but let's not do zero DTEs, guys. Okay. So next, choose expiration dates based on the time frame used to find the momentum or the play. This is big. If you're on the 10-minute, don't buy leaps on the 10-minute, right? If you're on the 10-minute, then that is a shorter play, right? Because you're looking at 10-minute candles. What's going to happen over the next 10 to 60 minutes usually, right? Those candles, if you look on 10-minute, you get 5, 6 of them maybe. I don't know, don't quote me, but that's usually a good enough move. That's an hour. Same thing if you're on the 5-minute or the 3-minute, right? You don't want to be buying leaps based on what you saw on the lower time frames. And you don't want to be buying, or you shouldn't be buying closer expirations if you're on the daytime frame. If you're on the daytime frame, you're looking at that much data to figure out what's going to happen over the next few days or weeks or months. But we'll go into this a little bit. Remember the 1 hour and 65-minute time frame and lower for day trades. The 65, y'all all know. Mark told us about this in the bundle. The 65-minute time frame is what we use for the 1 hour, right? So remember, when I'm looking at day trades, I start at the day and I work my way in, right? 1 hour, 65 and lower for day trades. Do not go too far out of the box because now you're looking at data that does not support your product. Now you're looking at what it's going to do in a few days, and you don't have a few days on your contract. Okay. When you go up, does that make sense? Yes.
Yeah.
Okay. 1 day time frame and up, short swings 2 weeks out, because you're looking at what is this stock going to do over the next few days, right? So give yourself some time, plus 2 weeks or so. The 1 week, the 1 week time frame for longer swings, a month out. If you're looking at the data on what it's been doing over the last few weeks, you want to give yourself a few weeks to make your money, right? A month. 1 month and 3 month time frame. I like these when I'm looking at leaps. And like a year out. Okay. When you get to these higher time frames, you're looking at something on a month and a 3 month. As you click through these time frames, the picture should become more clear to you. Okay, because you can go to the 1 month and it can look bullish, but if you go to that day, it could look terrible. If we look at Nvidia on the 1 month, it's going to look great. But if we look at it now on the daytime frame, it's not going to look so hot. Okay, because that's what's been going on the last few days. Make sense? Everybody with me? Okay.
Yeah.
Earnings. This is the last thing I have to say to you all. Earnings happens 4 times a year. Although I don't think newer traders should play earnings, I don't think anybody should be playing it. But if you have to play it, earnings will usually do what? Create a gap up or gap down. If you want to play earnings, this is a low risk way to play it. You wait for the market to come to you. You let it create the gap, and now there's an opportunity. Price ever comes back close to that gap, you'll be ready. And it'll be like you play earnings, but you are already right. Because if you play the gap right, you can go in heavy enough or go in with enough money, right? Or even if it's not a lot of money, the same money you would have put on earnings, hoping it gapped up. Well, guess what? You get that same gap again. Everything that people were hoping happened, you know is about to happen, and you can do the same thing and make the same amount of money. Okay. I know earnings are cool. Thank you guys. This is the end. But I know earnings are cool and it's great to figure out, you're like, oh man, I made so much money on earnings and this and that. But you got to figure out who you want to be in this game. Do you want to be the rich guy or you want to be the cool guy? I want to be the cool rich guy. Okay. But again, I'm just saying earnings are cool and it looks great, especially when you show your friends and you see all this stuff on Instagram, people being rich off earnings or making so much money. It's not worth it. If slow and steady wins the race, guys. And that's all I have to say. So do we have any questions, comments? I don't care about the concerns. Neil.
Can I go first?
Yeah.
Oh, yeah. So I'm gonna tell you guys what I heard from King's presentation. And I need you guys to listen to this very, very carefully. And it's relatively simple. If you fail to plan, you are planning to fail. That's it in a nutshell, right? Because he literally just laid out the proper way to set up an option play, right? You're looking at your Greeks, all of everything that's wrapped up in the Greeks, your delta, your theta, your gamma, your vega, your rho, and not necessarily, you don't really have to, well, to each his own. But a lot of us aren't looking at the rho. We're focused on what? The theta, and sometimes the delta based on how high that, or how high or high low that delta is, right? But again, he just clearly laid out the most proper way to gauge these option plays, right? So please, we jump into these plays half the time without even thinking, right? Especially if we're taking someone else's signal, right? We take this information and we just run with it with the hope that we start to make gains versus understanding well, all right, wait a second, let me step back. All right, let me look at this part. Let me look at this is going to play this role. This is what's going to happen if this moves, and so on and so forth. Right? He just laid it out. So please, please, before you take another contract, rewatch what King just showed us all. Please. Because he just gave every one of you the keys to the house. Now it's just a matter if you want to come in.
So, yeah, you just got to stick to the plan, guys. I try to make it as simple as possible. There are some things that will change, or some things you may notice that maybe I left out or I didn't cover, but I want to make the foundation as simple as possible. And then you guys can add your own twist to it, okay? That's my goal, is just to give you guys the best low risk strategy that I can, okay? So we got the blueprint. Just stick with the plan and do it over, rinse and repeat, rinse and repeat. And eventually it'll be okay.
Yeah.
Eventually we could buy a cool staircase, like your staircase behind you. I want a staircase like that.
Or you can buy a MacBook and that's stock photos.
You want Mac on me? You went with a Mac.
And I went crazy too. Yeah, I had to. My brothers convinced me it was too inconvenient, and I just said, well, if I'm gonna do this thing, the computer I had was good, but I just felt like this is a great tool, especially for people that are teaching. You guys have made me a teacher, so still
We appreciate you, though.
We're very lucky to like find the group of people like you guys on Instagram. It's really like a diamond, in the rough. It's very difficult. Like most of the things are scams. So to be here all this time with you guys and still like to see how much knowledge you guys give, and just you guys are amazing. So I think we all really appreciate it. I mean, your styles, the stuff that you teach, your willingness to teach, it's great.
Truly grateful, brother. It is an honor to sit here in front of each and every one of you to share not only the information, but the mistakes, the failures that we've experienced. Because, that is what you guys are paying for. I really don't know if anybody even realizes that. And I believe King spoke on this last week, maybe the week before. But when you sign up for mentorships, that is what you're paying for. You're paying for those future mistakes that are waiting for you. And now you understand, and when you've taken in this information, now you understand how to pivot when those mistakes start to show up, right? Just over the weekend, man, when I tell you I learned so much stuff, I'm still trying to unpack it, right? It is indeed important to tap into into stuff like this, because we want to make money. That is it at the end of the day. I don't care whatever else is happening in the world. I want to continue to make money. And not only do I want to continue to make money, I want to make sure that the money that I'm making is bringing me back more money.
So how do we get to hang out with you? You do notaries. Maybe you could come to my office and do a notary. But seriously, if you guys are ever in New York, I mean, I'd love it. If you reach out, you're welcome to come over. I'll make you guys some dinner, you hang out with the family.
Well, I'm in New York. So if you ever need a notary.
You are? Where are you in New York? I didn't know
that.
So that's good to know.
Wait, I'm in New York too. Can I come?
Yeah. Honestly, where are you guys in New York?
I'm in New York all the time.
So let's get together. I would love to. You guys are welcome to come over. I'll Camille, and we'll teach each other what we know.
Too cold.
Very cool. Just to piggyback off what Neil said, man, I do appreciate you all. Y'all don't understand how much. To be able to sit here and talk to you all, to explain this journey when I had tears in my eyes from this journey. I have been beat. I have been borderline suicidal in this game. I don't think I've ever been that in my life. But to know that I have faith and I said one day, you know, it's gonna help somebody, right? And to keep going and to look at my mistakes become you all's fuel. I can't even describe the feeling, right? To be able to tell you all, look, try not to do this because this is what I did. And I really hurt myself doing this. But to see people tuned in and actually listening, some of the stuff you guys quote that we've said, it's like, oh, y'all listening, right? You guys are using these, most of y'all, because Michael always talk, he always say he hear my voice, but he still do that stuff. So I don't know. But no, even with Michael, I know that I've said some things that is greatly impacted how he maneuvers. I
Yeah, for
tell.
sure.
I'm looking
For
at
sure.
the metrics, right? But to be able to talk to you all about this or be able to give you all something that once broke me is like a feeling out of this world. Like I can't even describe it. So I greatly appreciate you all even being here to tell this stuff. You know, this is stuff I had to just kind of hold in or tell my wife or God, you know, like, man, but to really be in those moments, and that's why you guys always hear me to tell y'all, like, just keep pushing. Because that's what I had to tell myself. You know, you lose $27,000, you gotta tell yourself a lot of things to keep going. So,
That's for sure.
but
And
again,
my magical number was 17,000,
see.
right? So we all have that number that made us straighten up.
Yeah.
Yeah, and we're trying to minimize you all's number because you're gonna get a number. You don't if you haven't had it already. We're trying to.
I have some numbers.
Sadly.
That my numbers when that guy spoke. Never again when power speak. Like,
Oh
oh
yeah,
boy.
yeah, yeah.
I
Yeah.
was like,
See,
oh
gotta
boy.
gotta check the economic events.
Yeah.
Oh, I knew it too, and I was just I don't know why I did that.
Yeah, it happens. Any more questions or comments?
Oh,
Go
hello.
ahead. How do you pronounce your name? I see it all the time.
Lottie.
I thought that. I just didn't want to murder it.
I'm still in 100 online. Yeah, so this was a really great presentation tonight because I've been kind of struggling with getting my strike prices and my expiration date and try different combinations, but getting closer to the money and just really sticking to that, that's made a big difference. So my question is about entry points on LEAP options. Do I generally, because with the LEAP, I'm 9 months, 12 months out, do I generally want to enter below support in having confirmation of an upward trend, higher volume, and momentum? Or generally, do I just, if it breaks support, just go in with that confirmation of the uptrend?
Support if you're in a put, but I think you're referring to resistance. When you break resistance, that's if you're in a call.
For the calls.
Well, what I would say is the basic answer is what is your plan, right? Because if you are waiting for it to break resistance, that is confirmation. A lot of times I wait for confirmation because I don't want to buy something and there's a bunch of resistance right there that's going to knock it down, right? So that's why you see us marking those levels. And Mark talked about this in the Elite Traders bundle time and time again. Once we break out of support, it's past those orders, right? And now we use the price will usually run because it's gotten past that friction. So when you're looking at LEAP options, yeah, you can definitely go out of the money, right? And just above resistance. I typically like to do that with my LEAP options because what happens is once we break resistance, you run right into me, right? And I don't really like friction in no part of my life. So if I know that there's a roadblock there or resistance, maybe I will wait till it's cleared or try to find a different route. So yeah, waiting on confirmation, you can never lose waiting on confirmation. Getting in too early, you add more risk to your plate.
Okay, great.
Cool.
And I've spoken on this before. right? When you're looking at the candles and when you're looking at support and resistance levels, understand if for whatever reason it reaches resistance and it does not break resistance, guess where it's going? It is going to look for support, right? So whatever time frame you're looking at, or wherever the candles are, it is going to continue to fight until it reaches that support level. And then if it breaks it, great. If it doesn't, guess what's going to happen? Now it's going to fight to get right back up to resistance.
Yep.
Right? So literally, these candles ping pong all day long, literally. And going back to that advice that King gave Joy, when you find that one ticker that you call home and you really understand what happens when it hits support and when it hits resistance and when it breaks support and when it breaks resistance, it's just going to print for you each and every day, literally each and every day, right? So please make sure you are taking that time to understand. And who cares if you got to wait, right?
Me.
Guess what happens when you wait? You get paid. Because
10K today is 10K in a few weeks.
Right. You see what
Same
I'm saying? Right. So if you're looking at this ticker and you see that it's on its way up to tap that resistance, and you push it, you position yourself right at the start of that level when it's starting to peak, or where that peak is being created, you golden. Right. And then the complete opposite when it's going to find support. Right. So yeah. Yeah.
Absolutely.
I don't know if you guys saw the FTNT player that I posted earlier in the analyst. So every time I got an alert, that was because it kept breaking support. Right. As soon as I saw that play, I spoke to Mark about this a couple of days ago that I was watching this specific company, and I was like, you know what? Today I'm going to play it. Sure enough, all right. I saw what was happening at the beginning of when the market opened. Okay, I see it's moving. But wait a second, it rejected. Oh, this is a perfect opportunity to get in. So I set my target at the first level of support, and then I set another level of support, and then I set another level of support. I set 4 supports. It broke the first one, the second one, and then the third one. And then the fourth one is when my plan was to take gains. And what happened? It rejected right before it hit that fourth level of support, and it just ran right up. Now, because I got time on it, I'm staying in it because I anticipate earnings to tank. So with that said, I decided to swing it. But nonetheless, literally, I just watched it from support to support to support to support. And that's it. That's all you got to do. Like, let's not complicate this.
Absolutely. And that's why I said minimize how many tickers you're looking at. It's just that simple. You it's just like when you guys have cars, right? You know your car. You know your car. And some of you all may like to let the gas get a little low. What's your favorite saying? Oh, I know my car. Yeah, because you drive it every day, right? So you know, well, I ain't gonna stop here. I know I've been here, but it's because you know your car. Same thing with these tickers, guys. It's not complicated. The market will try to force you to gamble as much as it can. Don't do it. Like Neil said, just wait. I'm telling you guys, the money is the same today as it is next week. As long as you keep waking up for it, it's the same.
That part.
If you don't, we don't want to talk about that. Just take your time, guys. We got any more questions or comments, concerns? I know Neil has some stuff.
I think one thing I would. Oh, I don't know who started talking. Go ahead.
No, go ahead, Garrett.
So I know we talked. After you showed us the gaps, and you talked about it doesn't necessarily have to come fill a gap. It can, but there's no guarantee, which is totally cool. And so I've been going in and looking at everything that had huge jumps to the upside, because to your point, things fall a lot faster than they climb up. So I've been marking gaps. Anyway, I don't even know what this stock is. I'd have to actually go look right now. But I looked at one, had a huge, it has like a $14 gap that it created. So I made all these alerts if it started dropping, and this is where it's really annoying. In my mindset, the only thing I was looking for was the drop. That was it. So instead of taking the $14 drop and somewhere it went from 122 to 139.
Okay.
And I missed all of it.
Okay, because you had tunnel vision. You're only waiting on it.
Correct. So I was like, all right, it's coming down. It's going to come down. And then it just, and I was not paying attention. I wasn't looking for that. So instead of catching the $17 to the upside, which it did in the last 72 hours, which I mean, that's 15%, 16% in the last 72 hours. I missed it all watching it. So anyway, that's just, I guess, speaking to the point of not getting in that tunnel vision. And I'm looking at my chart, like it's got all these alerts that never alerted because it never got there. Now they'll be there in the future if it does come back down. But that was very disappointing to think about. That's a huge delta that I'm sitting there watching it and I'm still missed it.
Yeah, you gotta look both ways before you cross the street, Garrett. But
And not only that, you gotta make sure you're also listening to what's happening on the outside that's causing the price action to move, right? Because if there's no negative news, then it's gonna keep climbing. That gap is not gonna get filled anytime soon.
But thank you for sharing your traumatic story with us. We feel your pain, Garrett.
But hold up, did you go to like the phone booth and do like a wardrobe change? I don't know what happened.
Oh, he's got layers.
Yeah, I got out of my Bruce Wayne.
Oh, okay. See, thank you for sharing that story of how you were abused by stocks. No, but I appreciate you,
It's
Garrett.
not a safe place. I apologize, everybody. King did not like my story. So
No. This is a safe place. This is where we want to hear it. I didn't like that it happened to you, right? But, thank you for sharing it. But no, that's a good point. Because I gave you guys that new toy or new tool to play with. Don't get tunnel vision. It's not gonna just be gap sauce all over the place. Like gaps everywhere. I'm just gonna make millions off of gaps, right? It's like no, I'm just serious. Joy, stop laughing at me. I'm serious, guys.
Did you say gap sauce?
That's what he calls it.
That's what I call the gap sauce. That's a
He
racing
said he
term.
was from DC and likes that mumbo sauce, but whatever.
That is so funny.
Mumbo sauce is good, but that's a racing term. When you beat somebody really bad, it's called gap sauce because you gapped them. But that's just what I named it. Dang, guys. But no.
Different lingo.
I don't know, man. I don't. Sometimes I don't know about y'all. I don't know where your heads go or what be happening. But again, but the point I'm trying to make is it's not going to be gaps galore. That's the right way to put it. So did it make it worse? All right, man. Garrett, don't talk anymore. Okay. No, okay. You got a question, Urban?
Nah, I'm good.
Okay. Any more questions?
I have a question.
What's up, Garrett?
So I guess going back to leaps and short swings, I was wondering how do you go between like I just go using your stop loss and averaging down on a position?
Say that last part again. How do I determine?
Yeah, like how do you just decide like to cut your losses on a short on a long swing or a leap and averaging down on your position?
Well, I decide beforehand what I'm going to do. Okay. So I already tell myself if it pulls back to this level, that means get out. That's the it's over level. That is the stop loss level. But if it pulls back here and it does this, and it's still a good play and it gives me confirmation to hold it, then I'll average down. And then a lot of times when I'm getting into a leap, I usually don't go in with the full position. Like right now, I'm in AMD, right? And AMD could go up or down. Had earnings yesterday. When I got the position, I didn't go in with as much as I'd like, right? because I want to account for anything that can happen. And it pulled back. So I said, okay, well, I'm gonna buy some more with the other part, excuse me, with the other part of the money or position size. So because for me, it's like this. If I only go in with, let's say I want to put 10K on the play, and I go in with 5, but I have another 5 in case it pulls back on me, right? And then I can average down or cut my loss. But if it never pulls back for me to insert the other 5, then I won already. I just run with the 5,000, right? Or the contracts that I have. Does that answer your question, Gabe?
Yeah, that answers my question. I like the strategy as well. It's like you already have a set amount that you're planning going into the play, and then it's you don't go 100% in. You only do a partial amount and see what happens.
Not a leap, not long out like that, because anything could change in between, and there may be another opportunity. I may like it now, but I'll love it if it dips. And again, AMD didn't do that for me. I thought AMD was going to dip today after the earnings. I thought it was going to dip bad so that I could at least get like maybe 50%, right? I can get my contracts at half off and go on with the rest of the money. But that didn't happen. It actually kept going up. So I wasn't I did get another contract, but I wasn't still able to go in with the full amount. But again, before I get into anything, I already say I have my target set, and I say, okay, I want this to go to 150. But if we pull back to $80, okay. But if we pull back to this level and bounce, then that's an opportunity for me to buy some stocks on clearance, right? For me to buy to load in with the rest of my position. But if we come down to $80 and we break, it may be time to get out, because now it's getting too far away from me, right? So I try not to, when I'm looking at leaps and long swings like that, I try not to use the entire position at once, just to keep just to keep some ammo in case I run into some obstacles. Okay.
Okay, thank you. Yeah, I think that definitely makes a lot of sense because a part of your presentation, or I guess what I've seen so far, was like economic events or like something with the tariff example, like can have an influence on the price when you're going into a leap. So I think using that partial, only going entering a leap with a partial like amount of the money you had planned out definitely helps me out think about a little bit more.
For sure. And because like you say, you know that in this market, like Neil always says, yesterday's market isn't today's market. Something can happen tomorrow and the stock can have a catastrophically bad day, right? Or a bad time. And if it's just a bad day, then that provides your opportunity to average down and get some cheap stuff. But what if it's just like SMCI? What if it just falls, or AMD? It falls and it never stops falling, right? You want to be out of that, right? You want to prepare for those types of things, because it just makes sense to me. Like, if this is a leap, I got a lot of time and so many things that can happen between now and then. I want to be able to be prepared and take advantage if it does pull back or not. Because again, whether you put 10K on the play or 5K on the play, if you put 5K on the play and you want to put 10 and it starts to run and you at 20-30% already, you take the other 5 and you put it into another position. Buy some more products with that 5. Because this 5 is already working for you. Okay. Good question though, because it is a difference. It's a great question.
Yeah, for sure.
Yeah, that was a great question.
Yeah.
All right, so real quick, guys, I'm going to show you guys this indicator. So this is a brand new indicator by Lux Algo, right? So it just hit. I just got the alert for it today. So I really don't know anything about this indicator. So just from what I've watched, it seems like it's relatively good. It's good for understanding volume zones when it comes to the candles. And you do have the option to put it on your chart, or you can have it in its own separate pane. All right, so this is it right here. So volume zones, internal visualizer. All right, and again, I don't know anything about this. So I definitely do have to do a deep dive on it. But so what I've gauged from it so far, it's just simply telling you the volume, the seller's volume, and the buyer's volume within the candle. And it gives you all that information within like a zone, which I think is pretty cool if you follow volume enough in regards to the candles and just the chart in general, because it does help create opportunities. So let me show you it live. So this is what it looks like on the chart. I'm sorry, what it looks like away from the chart in its own separate pane. I wish I could make these numbers bigger, but unfortunately you can't. But again, it's just simply giving you the seller's volume and the buyer's volume. All right, let me show you what it looks like on the chart. Chart of it.
What was the name of it again?
It is called the volume zone. Right here, volume zones internal visualizer.
Hey Neil, I think you need some more indicators. You know, I don't think you have them. No.
I never do.
Bruh, the way you scrolled, my page doesn't do that.
I probably average looking at a new indicator like maybe 3 to 4 a day, because I am really on this forever mission to find the perfect chart. I really am. Like, it is insane for me.
When you say that,
I really want to wake up one day, look at my chart, make an informed decision, and actually I could do it today, but it's just not where I want it to be. I want to see a play, get into play, watch it go in the direction I need it to go, at minimum 50%, and then take my gains and gone. And I want to be able to do that at minimum 9 out of 10 trades.
Do you ever
it's not going to be perfect, but for the most part, 9 out of 10 trades, that's my goal.
Do you ever consider like the paid indicators? Like I wonder if there's like why they make some paid, like if they hold back on some of these indicators and like what they could possibly do. Because Lux Algo has like, I showed you guys the other day, like the set of like paid indicators. I think I paid like $500 for the year, but I wonder if, you know, if they're more accurate or what it is about them that makes them paid.
I mean, me personally, I don't know. I'm not, I honestly can't remember if I've paid for any indicators. I really don't think I have. Only because, and it's not to say that there aren't great paid indicators out there. I just like the path I'm on with using the free ones. And if for whatever reason I run out of the free ones, then I'll definitely be hitting the paid ones.
If you run out of free ones, you have a problem. There's like 50,000 free ones.
So, but yeah, so as you can see, it's now on the chart. And you can see how it's moving. You can see how the volume is moving in this specific candle, right? So right now, from a buyer's perspective, we have just over 55K volume, right? So even though it's in the downward trend, but it's still a bullish candle. So based on what's happening, it has the potential to reverse. At least that's what it's telling me, right? So, but like I said, I'm literally fresh looking at this indicator, and I figured I'd share it with you guys because I really want you guys to start looking at these indicators and doing a deep dive and see how it can fit your chart. And then listen, it doesn't hurt, right? If it works, it works. If it don't, it don't. Scrap it. Move on. Next. As you can see, all the indicators that I've gone through. Whew.
Oh god, that's a cool one though, because it doesn't take extra space on your chart, so you have the candles anyway, and you can kind of see if it's bullish or bearish, and it's just giving you some extra information. So that's cool.
Right.
Is my microphone working? Can y'all hear me?
Yeah, we can hear you.
Yes, we can hear you.
Okay, good. I didn't know if it was working at first. Hey,
I told y'all, don't
oh God, sorry.
just because of me.
Computer's doing whatever. Anyways, Neil, did you take a look at the indicator that I shared with you earlier?
I did.
You did. Okay. Can you mind? You mind if I share that with them? King, do I have your permission as well? Because I don't want to leave them empty-handed because that thing changed the game for me today.
Yes, sir. Please, please.
Have at it. You guys
If
are
you
showing, you guys are showing signs of an addiction, but go.
Hey, the first step is admitting, okay?
That's it.
But
That's
it is the first step.
Go ahead. Nah, I love it.
Y'all ready for this? I think
go.
Let's see it.
All right, so right now I need to pretty much change my screen. I'm just gonna create a new layout for just a second. All right. Oh. Test. All right. So I stumbled upon this one because this is how I find new indicators. All right. So if you go to community and then you look at trending, and you guys know I have been fishing for the perfect trend out indicator. So I found this one called Trend Filter. All right. Did it
Wait,
add it? Yes.
this is spanking new.
Bruh. Yes. But wait, there's more. So I came over here, turned to the bar colors, and then I went to style. When it's falling, I have changed it to a down arrow, rising to an up arrow. Do that consistently. When I throw on everything else, this thing is amazing. So, first of all, peep the arrows, peep in the middle, how it changes green to yellow to red to green, depending on what it is that I'm watching. Here's Bitcoin, right? Now, notice if I zoom in, you see the arrows telling me the trend. It's down. In the middle, I have confirmation. If it's really red, it's really bullish. If it's yellow or kind of fading, it's neutral. And of course, if it's green, I said bullish, bearish is what I meant. Red is bearish, yellow's neutral, green is bullish. But what I really like is that arrow right underneath it. Today, what I used it for, I had the old flawless traded system up while I was on my live, but I'll be keeping it 1,000% with y'all. I was looking at this because it was cooking. That's how I was able to know when to get in and when to get out of my trades because of what I was looking at on the side. So this thing is amazing. Again, go to your trending, go to your community, right? Look at trending. These are always the top performing indicators. And man, like I've literally fallen in love with this thing. And if I go to my 3 King 6 rings, I have that paired up with another indicator that you guys are going to see sporadically in your locked ones. I told you I was going to charge everybody else, but I just decided I'm going to just give it to all the mentees from here on out. But it's called the sine wave. The second one is the sine wave, Rogers sine wave overlay. So I will be adding that one to your trading view.
Oh, that's awesome. Thank you.
Yes. The cool thing about the sine wave is it also measures volume. Okay. So it calculates volume. It calculates let's pull that up. I'll show you this.
Yeah, so that's the one I was playing with.
Uh-huh. All right, so it's Rogers sine wave overlay. All right. So this one, what I've done is I've turned off the outer barriers on mine, and I just have a line that runs in the middle. But notice, like when it's bloody or when it's going down, I have blood, and when it's going up, I have a rocket ship. So let's go back to the chart so you can see it. Just an extra layer of confirmation, right? Also, I can see fake outs on, depending on what it is. Like here, for example, Bitcoin, I had a rocket ship come in. I have the middle line actually turned off on my sine wave at the moment because I have my Algo Alpha on, but I could turn that off for you so you can see it. And I plotted it just a line that changes, and I kept Neil's favorite colors, the blue and yellow. Yellow would be normally when it's supposed to be going up, supposed to be. But right now we can see Bitcoin on a 30-second is pulling back. But just as King spoke on tonight, he zooms out. The yellow is uptrend, even though we got pulled back, so we can avoid the fake out. And notice the indicator I just shared with you guys has those green arrows telling me, look, just hold the line, Mark. Hold the line. You can just wait. We're going to see some upward momentum pick up. And then, of course, we got our traders trend dashboard down here confirming what we're seeing, that we're holding above that 20 EMA. So it's confirmation after confirmation after confirmation. And I'm in love with this indicator. I play with it literally all day today. So just thought I'd share that. Any questions?
So is that something we'll see in our shared indicators? Or do we have to give you our names again on Trading View? Because that's pretty cool.
So the sign one, I already have your names. So
okay, cool.
It's gonna be easy. But the other one, you guys can just go add that today. It's free.
Got it.
Go to community.
That's awesome.
Go to trending. There it is. Trend Finder 2 poll by Big Beluga. I think it's awesome.
Yeah, it looks pretty
It's
cool.
the arrows that sold me. I mean, right here, these are actually triangles at the end. I could have said something different there, but I have all my stuff consistent. I probably should change it, have something different at the end. I might play around with it a little bit more. But yeah, it was hidden for me all day long.
Mark, what was the settings besides changing it to arrows? You did something at the beginning.
Yeah. Okay, here we go. I checked the signals and bar color.
Signal. Oh, okay, that's what I was missing.
And of course, you can go here and you could have different. Let's change this thing to let's just do label down. I don't know. Let's do a circle. No, we'll do this. Triangle down, triangle up. See the difference. So now we change those to triangles up. There's triangles down. I don't see the arrows anymore. But it's just like different things you could play. We could set it up the way you like. Again, I just found it today. I didn't create it. I like it a lot though, and it gave me an extra layer of confirmation. And even earlier this evening when I was listening in, I just tried to play around with it one more time with a Bitcoin perpetual, which is why you see this on BTC USDTP right now. And I'm finding when I use it for that purpose, like the 5 second is really the best time for me when trading perpetuals. But I mean, just look at that momentum. Look how it's changing. Look at the confirmations that you're getting. Look at the volume. Look at the trend. I mean, it's spot on, man. It's hitting the fibs. I mean, it's just a perfect storm.
Where do you see the volume? Is it just the size of the bars? The candles?
Can you see my mouse, my cursor?
Yeah.
Looking at that delta volume is what I'm looking at.
Oh, I see.
I have my volume turned off. Again, I do like a clean chart, even though there's a lot of stuff here. The volume's there. I just have it turned off. And honestly, I had the Traders Trend dashboard turned off for a little while today too. But, I'm just, again, when I have different things on the chart, I turn certain things on and off just to see if it covers something up or, if it's needed. See, I can't have the triple smooth on and run that at the same time. Also, I'm going to tell you that on Friday when I'm live trading, nobody's going to see this setup. Okay, so I'll just have the old school flawless trading system up, but I will be looking at this on the side. All right, so I ask that y'all keep what we talk about
That's awesome.
quiet.
That's really cool. Thanks. That delta volume, how come sometimes when the delta volume is positive, it's still red and it's on top? Is that just because sometimes the trend could still be going down even though the delta volume is positive?
Yeah, because look, watch what happens when I change to a different time frame. That delta volume is going to change too. Watch. You see? 10-minute time frame. You notice a difference?
Right, but it says delta volume is negative. Like sometimes you have the red line and the delta volume is still positive. Like you could have a positive delta volume with a red line, right?
Yep, but that also is contingent upon time frames. Watch.
Got it.
See, look, I go back where we were. Look at that. See?
Right.
So depending on the time frame that you're watching, that delta volume changes based on the chart.
Got it.
So it's not going to be consistent, which is why I love what King said tonight, which is zoom out. Zoom out on the play. You'll get a different perspective. That's how he always crushes it with them SPY puts every Friday. So, yeah, I mean, but he zooms out. That's a smart route to take. Okay. All right. I'm going to stop sharing.
Okay, it's 8:10, so I don't want to keep you all too long. But if anybody has any last minute questions or comments, shouldn't be any concerns at this point. I just realized once again, this is the last day, guys.
I'm
Unless-
concerned that it's the last day. You know, this is my second time here. I almost signed up for the third one, but I stopped myself. But again, I just want to say how much I appreciate y'all giving your time to us, that y'all don't have to be doing this. And I really appreciate your generosity of sharing all of your knowledge with us, and also your support and your genuine interest in how we're doing. I really think this is a tremendous, tremendous opportunity that we've been given, and I appreciate it so much.
Absolutely. Absolutely.
God bless you, Dr. Joy.
Yeah, we all feel the same way. You guys really are awesome. Thank you so much. I mean, the perspectives and just all the lessons are just really so helpful. So thank you.
Appreciate it. Well, we know 7 of you all feel the same way. The other 20 people never spoke to us this entire time. Never said anything to us, never turned on the camera. But no, it's all good. I get it.
Just a quick reminder too, you have access to each and every one of these recordings. If you ever have any difficulty locating your content, you can text me. You have the mentorship number. You can send me a message on Discord, send me a message on Instagram. I'll just need your email address to send it back to you so you can access it again. Also, open the book. You guys have had most of these resources, even with the Fibonacci's, all of that. Not everything we covered, but some of it already at your fingertips. Go look through the mentorship handbook. That's going to be very helpful for you going forward. Print it out, keep it to the side, do whatever you need to do. But there's a lot of good stuff in there that will help you along the way. So, I just want to let you guys know we appreciate y'all just as much because we've learned from you too, and your kindness and your patience with us does not go unnoticed. We truly, truly appreciate y'all tremendously.
Thank you. The only thing I'd say is you guys are so professional. The only thing I think growing, because I think you're doing such a good job with YouTube, and I really tune in pretty much every morning. I make it a point. And I'm sure there's people who are jumping on the CNC and listening to you. You just have to be careful with like these people that are unprofessional, like in some of these channels, because like you weren't in on Friday. I'm sure King and I'm sure they told you have some sort of weird bickering sometimes that happens, and people that don't keep it professional. And it makes it just, for people who are new and they don't know what you guys do, that, they might not last long enough to figure out how awesome it is. So you just want to figure out a way to keep, some of the blabbing, to a minimum. And like the people who get on the live, just, they should be professional. It shouldn't be like, just, arguing or, you know what I mean?
Yeah, we try. We've been doing a good job at it. We just had a little turbulence as of recent. And that happens, especially when you got these groups You got a bunch of people with a bunch of different opinions, and sometimes people have more opinions
Ego.
than they have patience.
Yeah, you
Or
did good though. You managed the room good though.
Oh no, you
Yeah,
guys
th-
did.
hey,
You did
this
great.
I'm
Yeah.
gonna recommend this book to everybody on Friday because trying to work on it my daggone self. How do I take this background off? There we go.
Ego is the enemy.
Ego is the enemy.
Great book. Great book.
Yeah.
Yes.
I'm gonna get it. But they did a great job, like King and Neil, of like deflecting it. But you just want to be careful, and there's some people who you may not want to be, allow them to stick
Yeah.
around too long if they, if they have to treat
Bruh,
to do that stuff.
that waiting room gonna get so full, Doc. They gonna feel like they at the doctor's office waiting for some shots. I'm telling you. Look, we're gonna keep it holy on Friday. I'm not entertaining anything if it's not a trade. I don't want to talk about anything off topic. I'm literally gonna be muting everybody when it come down to getting off topic. We're gonna trade, and that's it. That's it. So
And,
I think the team knows my expectations, and I hate that happened because I got hundreds of messages, hundreds. So yeah,
They both did good though.
yeah, I know they did.
They both did real good.
Yeah, real good.
But anyway, y'all, I'm about to go downstairs and watch church with my wife. She didn't call my name already, so
Thanks, guys. You guys are the best. Really.
Right. Appreciate it.
Hold on, guys. I just want to end it on this note. Please make sure you go back and watch this information.
Oh,
I
absolutely.
really do not want to have a conversation with you guys in a month or 2 months from now, and you guys are still trading at the same level. Right? We have given you guys so much game that you, in a month or two, if you really take the time out to go back and look at this information, you should be so far ahead of the masses that, as the racing term that King likes to use, the gap sauce, we should be seeing gap sauce everywhere.
Joy.
Right? Like,
No city. I'm sorry.
like
That would
You
get
can
you every
gap sauce
time.
1,000 bottles at a time from Costco, I heard.
help them,
1,000 bottles
Lord.
of baby oil.
Help them, Lord Jesus. Help them.
Yeah, no, but if anything, anybody has anything else to say? No? Okay.
Appreciate you. Appreciate you.
Thank you guys, man.
Thank you,
guys.
Neil.
Say it again.
Thank you, Mark.
God
Thank you,
bless
King.
y'all.
Thank you guys so much.
I
Appreciate
learned
it.
a lot.
Hey, oh, Sam, where you going? Hold
Man,
on.
I'm teaching. I have a class. You guys need to take a month. I'm literally like in the middle of class right now. Let me just show you. These are my kids. Wait. Oh. So I need to go teach my kids. I don't know if you can
Oh,
see them.
wow.
So
I
I
thought
had
maybe
to like,
I thought maybe you were working on that wedding invitation.
oh, yeah. If you guys come through, yeah, come through to Hong Kong.
All
So
right, y'all.
See you
I will
later,
see
Sam.
you all in the
much
Discord.
love, guys. Yeah. Take care.
Yeah. I want to see everybody killing it.
Neil, I'm gonna get you some indicators.
I didn't hear
Don't,
Did you say
hey,
All right.
don't give Neil any more indicators. please.